In the previous couple of videos, I demonstrated how to record customer receipts, so payments against customer invoices, sales invoices, and also how to record supplier payments, so payments of purchase invoices. But what about payments in and out of the business, so in and out of the business bank account, and there isn't an invoice, and there never will be an invoice? So customer receipts and customer payments are all about clearing invoices on customer accounts, on supplier accounts. But what about those payments where there is no invoice? As an example, money into the bank for interest, savings interest. You're never going to raise an invoice to the bank and ask for your interest. It's just going to come in automatically. We don't need to record credit sales, credit income for interest. Or perhaps a shop that doesn't raise invoices because there's an instant exchange of goods for money, cash for goods. So what do we do in that situation? Well, we go back to the bank accounts and we go to a bank account just like we did in the previous videos. We go to new entry again and sales receipts. Let's do these other receipts first. Previous videos, we stayed on this tab here, customer receipt, to allocate or record a customer receipt against a sales invoice. If I click on other receipt, this is where we can record a payment into the bank account where there is no invoice or no invoice is needed. For example, bank interest received, as already mentioned. So we can choose our customer, but it's optional. We don't have to choose a customer. Whereas when it comes to customer receipts, you have to choose a customer because the money coming into the bank must go against a customer invoice, a sales invoice. So other receipt, customer is optional. We select the bank account again that the money was paid into. The method again, this is very similar to previous videos. The date again. The reference is optional, and then we put the amount in. So let's say a whopping interest of £1.12 or $1.12, €1.12 was received into this bank account on this date. In this bottom section, we don't have an invoice that we allocate this payment to, as in the previous videos. What we need to do is actually allocate the payment to a ledger account, a nominal account. One of those accounts that appears in the chart of accounts covered at the beginning of this course. And you can see here 4410 interest income, and the details could be interest received for September 2025. There's no tax on that, so £1.12, €1.12, $1.12. If we save that, what that's going to do is record that money into the bank account. It's also going to record that against interest received. And let's just do one more. So new entry, sales receipt. Once again, we can actually go a quicker way to that screen by using the create button, as I showed you in previous videos. So other receipts. So other receipt here. So bank account again. Let's say this was cash received this time. Let's say this is a shop. Today's date 3/2/5/12. So perhaps this is the daily income, the daily take-ins from the shop. So shop sales A. So daily takings in cash 22nd of October 2025, 3/2/5/12. We can save that. So that's how you record money into a bank account that doesn't have an invoice and doesn't need to have an invoice. In the next video, I'll show you how to do the same for payments. So when money leaves the bank account, that's not against a purchase invoice.